Ladies and gentlemen, good day and welcome to the Rushil Decor Limited Q3 FY23 conference call hosted by Asian Market Securities Limited. This conference may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantees of the future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhattacharya from Asian Market Securities Limited. Thank you and over to you.
Thanks, Mike. Hi all. Very good morning and welcome all to the Rushil Decor third quarter and 9-month FY23 earnings conference call hosted by Asian Market Securities. From the management side, we have with us Mr. Rushil Decor, Executive Director, Keyur Gajjar, CEO, and Hiren Padhya, CFO. I now hand over the call to Rushil Bhai for his opening remarks. Thank you. Over to you.
Good morning, ladies and gentlemen, and welcome to the Rushil Decor Limited earnings conference call for the third quarter and 9 months ended on 31st December 22. I would like to thank Asian Market Securities for arranging this call and all the participants for taking the time to join the call. Today I am joined by Mr. Keyur Gajjar, CEO, Mr. Hiren Padhya, CFO, along with Air Factors PR, our investor relationship advisors. We have shared and uploaded the investors presentation on the exchange and hope you all have gone through the same. Let me share with you some of the key highlights of the third quarter and 9 months during which we have recorded the growth of 26% and 46% respectively in our operating revenues. Both our laminate and MDF business have shown steady progress in this period. Our laminate business has registered a growth of 18% during this quarter. Laminates grew by 41% in export compared to last year, highlighting the strong demand of the product manufactured by our company in the global markets. In the domestic market, with the significant steps taken, we are able to improve the price realization, which helped us to achieve the EBITDA margin over 10% in the laminate business. We have displayed positive performance in our MDF business during the quarter and have registered the growth of 27% by the value and 22% by the volume. Realization in the domestic industry for the plain MDF was subdued as there was an continued pressure from the higher imports. However, we are confident that with the targets of increased contribution of value-added products, we are in position to mitigate this trend and deliver the significant growth in the coming quarter. During the quarter, we have made substantial progress in our geographical presence by adding 80 new dealers and distributors both in laminate and MDF segment. This should further enable us in catering a larger customer base and increase the visibility of the brands Rushil and Veer. We are continuously collaborating with the local carpenters across the country, conducting the workshop to educate them on the benefits of MDF, also enhancing the skills use of the MDF for delivering the effective to the end customer. We are confident that with this branding, distribution and channel partner connect initiative, we should be able to achieve strong growth with stable EBITDA margins going ahead. During the quarter, apart from the supply pressure from the imports of plain MDF, there were also a marginal increase in the wood price. The contribution of these factors impacted the EBITDA margins in the MDF business compared to quarter 2, even though there has been improvement on a year-on-year basis. However, to safeguard ourselves from these headwinds, we are working on various fronts to ensure we deliver the steady expansion in the margins going forward. We are constantly engaging the various stakeholders to identify and collect the data in terms of requirement and preferences of customer. Our in-house R&D team is continuously working to improve the durability of our product and develop more value-added products. We have also identified a few areas where we can efficiently utilize and optimize our resources to boost our margins even further. We are timing our production schedule in a systematic way to the optimum capacity utilization in line with the industry demand. This will help us to stay ahead and deliver our customers with a quality product and a reasonable price. These initiatives should enable volume expansion, higher realization, and greater productivity in both laminate and MDF segment. On the debt reduction front, I would like to highlight that we have recently announced a fundraise by the way of right issues, which should help us significantly reduce the debts. Apart from this, our healthy cash generation from the operations will further support our capital requirements and strengthen the balance sheet. Currently, we have a capex plan of rupees 60 crore for our laminate business. This is to manufacture jumbo laminate sheets, which we have planned to export to Europe, USA, Australia, and other global markets. Work on this initiative is in full swing, and it's expected to be operational by Q1 financial year 25. That is all from my side. I would like to hand over call to our CFO, Mr. Hiren Padhya, who shall take you through the financial highlights. Thank you very much.
Good morning and thank you, Rushil bhai. Let me take you through key financial highlights for the quarter and the 9 months ended 31st December 2022. Our Q3 FY23 performance has been in line with our expectation and gives confidence of achieving our set targets for the financial year and going forward from there. So far as the quarter is concerned, we have reported operating revenues of 210.3 crore, a growth of about 26% compared to 166.8 crore. This was driven by the strong growth in both MDF and laminate segments. MDF business revenues grew by 27% on year-on-year basis, contributing 152.8 crore in Q3 FY23 compared to 120.6 crore in Q3 FY23. Laminates contributed 56 crore in Q3 FY23 compared to 47.3 crore in Q3 FY22. That is a growth of 18%. EBITDA for the quarter after adjusting for the forex loss stood at 38.1 crore as against 19 crore in Q3 FY22. That is year-over-year growth of 101%. Net profit stood at 10.2 crore as against 7.3 crore in Q3 FY22. Again, a growth of 40.5% on year-on-year basis. While EBITDA margin increased by 677 basis points in Q3 FY23 to 18.1% as against 11.4% during the Q3 of previous financial year. PAT margin stood at 4.9% in Q3 FY23. During the quarter on MDF front, our export volumes increased significantly compared to the quarter last year, while our export volumes of MDF rose by 6% on year-on-year basis. For the 9 months ended 31st December 2022, the net revenue from operations stood at 624 crore, a year-on-year growth of 45.5%. Here I would like to mention that last year turnover, that is 624 crore, has already been achieved in the 3 quarters of current financial year. While MDF contributed 462.6 crore in 9 months, that is a growth of 59%. Laminate contributed 156.5 crore in 9 months, growth of 12%. EBITDA for the 9 months of financial year stood at 133.7 crore as against 42.4 crore in the previous year. Again, a growth of 215% on year-on-year basis. This is again adjusted for the forex loss in the 9 months period. Net profit was at 64.1 crore in 9 months with a margin of 10.3%. With this significant improvement in financial performance in 9 months of FY23, we look forward to the financial year delivering outstanding numbers This should also provide a robust platform for the next financial year. This is all from my side. I would like to now request operator to open the floor for questions and answers.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Karan Bhatelia. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. Sir, just wanted to have some clarity on the CVD, which we were expecting somewhere in the second week of January. So what are the new timelines now, and what percentage of CVD could protect or safeguard the domestic players? That would be helpful.
Thank you, Karan, for the question. First of all, the judgment from the High Court has already been passed from Delhi High Court, and till now we have not got the concrete judgment in our hand. So we'll share the details with you once we have the judgment in our hand. Thank you.
Okay. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Vineet Shankar from JM Financial. Please go ahead.
Hi, sir. Thank you for the opportunity. So I just wanted to ask on the price cut you have taken during the quarter, the third quarter, and any during January and Feb.
Yeah, good morning, Mr. Shankar. I think there is no price hike taken place in our first quarter, and even in the month of January, February, or even in last quarter also. Hope I am audible.
So any price cut have you taken?
Price
reduction.
In last quarter, we said that there was some effect of 3 to 5% in some areas, not all areas.
Okay, and so can you highlight which area were they?
It was mainly south and west.
Okay, sir. And sir, if you can also highlight the breakup of plain and pre-laminated MDF mix.
At present, the overall ratio of MDF is almost 28% is our value, and balance is our plain grade, which includes exports too.
Okay, sir. Thank you. I have more questions. I will come back in the queue.
Yeah, please.
Thank you. We have the next question from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the opportunity. I just wanted to understand your strategy, because what we have seen, other branded players have not taken a price cut, but possibly you would have taken some 3 to 5% cut in south and west.
It's very difficult to say whether price cut is there or not. If I don't change my price list, it doesn't mean I have not taken the price cut. There are ways to pass on the credits.
Okay. So got it. So you are saying more or less your price cut was in line with industry always. Maybe you might play with incentive or some other thing, so you were in line with industry. Is it a perfect understanding?
Very simple. If you want to maintain your market share, you can command premium at some level. You cannot do all the things.
Understood. Just wanted to understand one more thing. As we are hearing that the imported MDF is selling at 25% discount versus players like you. So the 25% is a very big difference. So what is the normal level which it can sell? Because my understanding is 10% is something.
Let me tell you, as on date, the pot landed cost, if I take about the highest selling product, is around 15 to 18%. And if we go further down, like further central, like Hyderabad, Coimbatore, all the places located far from sea areas, then the price difference is only 12%.
Okay. Okay. But the price difference has increased further in quarter 3. So will it be fair to understand more price cut is on store right now in quarter 4?
So can you repeat again? I'm sorry, I'm not able to.
Just a minute.
Can you repeat your question? I'm not able to hear properly.
Hello. Is it better now?
Yeah, quite.
Yeah. So I was saying, as the price difference with imported MDF is increasing, so will it be fair to assume there would be more price cut in store in quarter 4 or quarter 1?
No, I guess you can see our volume and our top line. So we really don't see, because this import price is stable since September, October. Because they have reached to probably the bottom price.
Okay,
so we don't see any further price reduction in selling price of imports. And yes, there is a currency fluctuations, like sometimes it is 81, 83. So this exposure is something that importers are considering. So we really don't see any price cuts in.
Got it. Okay. And what sort of volume and margin you are looking in quarter 4 in FY24?
See, we really want to make sure that we maintain our market share. That's one of our priorities. So definitely it will help us to utilize our capacity also. And yes, we want to increase our value-added business too, because we can see that from our AP plant, in quarter 2 our value-added business was 9%. Now in quarter 3 it has reached to 13%.
Okay. So given a choice, you will prioritize volume over margin. Even if it comes at the expense of a lower margin, you will prioritize volume.
Definitely, it's not a question of priorities, giving the priorities to volume. It's all about balancing entire thing. But yes, market share is very important. We have to consider new capacity addition as well. So we cannot simply, we have to maintain our market share. That's very important.
Okay.
But you can see that we didn't take any price cut in. There was only one price cut. That's all. Nothing much.
Okay. One last question from my side. So earlier we were listening, the smaller players are adding various capacity like, 200K CBM, such many smaller players by importing Chinese machinery. So after this, MDF margin has decreased in last couple of quarters. So possibly such players' entry might now be restricted.
I think currently you can see that despite import, despite these new players with unorganized approach, we are still able to maintain our business in a good manner. You can see that whatever the margins affected, one reason is it's not only, it's over the industry, it's not only one company. And number two, forex loss is another part. So we are really not, sure. I don't think there will be any problem from an unorganized player. And we really don't see much of the capacity addition in near future.
And also I would like to add here that the MDF industry is growing at the CAGR of 20%. So there is the market is going to expand and everyone is going to get their own share. But the difference here between unorganized player and organized player is about the machineries. We bring the German technologies to make sure that our efficiency is much more better than the second-hand Chinese lines.
Okay. I'll just add one more question. So the MDF import, which is, at 25,000, so is it at its peak or we should expect further pickup in this?
So my question is 25,000 per month or quarter?
Per month.
I think it's between 20 to 25,000, and we really don't see much of increase because this is my personal belief. I think these exporter to Indias are not making much business out of this export. So probably further reduction in price is question mark. And with this model, one cannot bring imported MDF to northern region, central region, or to the extent northeast region. So we see some of the effects, and we have already seen that part. Despite cheaper imports, we are still able to maintain our volumes and pricing.
Okay. So someone want to bring the MDF from south to north. So what would be the additional cost we have to incur in terms of percentage of sales?
So you are talking about south to north?
South to north. I just want to understand the difference between south and north. What is
this question pertaining to imports or for us?
You can reply in both ways, import and
I tell you, if you want to bring it from Malaysia or Vietnam, the ideal port is Mundra. So it's a Mundra to north.
Okay.
And ideally, I think it's costing between 12 to 15 or maybe even 18%.
Okay. Understood. Thank you. That's it from my side.
Not a problem. Thank you.
Thank you. We have the next question on the line of Manan Shah from Moneybee Investments. Please go ahead.
Thank you for the opportunity. My question was on this forex loss of 11.6 crore for the quarter. If I look at our total exports for the quarter, laminates as well as MDF, I think it totals to about 58.2 crores. And versus this forex loss of 11.6 crore when the currency movement has been fairly stable between 82 to 80. And this 11.6 amounts to almost 20% of our total export. So I wanted to understand why did we incur such a big forex loss, and is this loss attributable entirely to the MDF segment, or it is split between both the two segments?
Okay, I think it's a good question. See, first of all, the total loss, which is 11.6 crore, is mainly attributed to MDF. Now, when you are saying export, see, when we are just taking the exposure in terms of forex, it is because of debtors and creditors, and I think major part so far as we are concerned is from the loan which we are already having as of now. So the loan which we have taken for the purpose of AP project, I think that has contributed a major in terms of that forex loss. Because if you compare March versus December, and even in terms of last quarter versus this quarter, I think in both the cases in USD and Euro, both has depreciated, and this has gone against us. And I think you understand and appreciate also the accounting is required for the purpose of this notional entry. But yes, the two things are there. One is the major part, I would say, see, otherwise we have natural hedge in terms of export realization versus forex payment, which is generally the import of raw material and other things. So here it is mainly because of the loan which is outstanding as of now.
Okay, understood. My second question was that in your opening remarks, you highlighted that there was some increase in the wood prices during the quarter. So if you can just highlight what sort of increase was this, and if there has been any further increase in the wood prices post December.
The effect of the wood prices is roughly around 8% on an average in all the plants.
This 8% is on a Y-on-Y basis or on a Q-on-Q basis?
It's on Q-on-Q basis.
Okay.
And also we further expect to increase the wood price by 1 or 2%.
Okay. So what has led to such an increase in the wood prices in our region? Because I believe there is no other MDF plant at least within 100 kilometers of our vicinity. So,
Sorry, I didn't get your question. Can you just repeat it?
no, I'm asking if what could have been the factors for such an increase in the wood prices, because I don't believe there's any other MDF plant in our vicinity.
Yeah, so basically, currently, the Andhra Pradesh is recording the highest number of sales in the rice, and because of which the transportation cost has gone up.
Okay. My next question was on the utilization levels of the MDF segment. So now it has been almost 2 years since we started our new plant, and we've not been able to ramp it up to almost 80-85%. So we've been guiding that we'll reach 85% by the end of this year. However, as it is visible in this quarter as well, we've only been able to achieve 70%. So, and plus we have this Conti booster technology which only we possess in this country. So what have been the reasons why, if you can just highlight a couple of reasons why we are not able to ramp up our utilizations further?
See, in fact, there are one or two reasons. Main reason is export. We are consistently, I think, using around 4,000 CBM per month. That's our target. And we are putting up good efforts. Like, for instance, in this quarter, we have added almost 85 new channel partners. And apart from this capacity utilizations, we are focusing on value-added capacity utilization also. So we are very optimistic of using this capacity by 80-85% in coming days for sure. This is one of our priorities. Even in my last call also, I have clearly said that value-added business, capacity utilizations, and cost control. These are the three factors, and now we have added one or two more things. Like, we want to focus on quality and service of product, because now, import quality is very inferior compared to the local player. We want to focus on our quality and services also, and we want to maintain our market share. So definitely in coming days, I'm sure we'll be able to part.
Okay. What has been the valued mix of the Vizag plant?
I think from 9% cube, we have reached to 13%. There is no point comparing last year.
No, right, definitely. And what are we targeting by the end of this year?
It's very difficult to say, but our overall target is to reach 40% of entire sales. So we are putting our best efforts. At present, we are at the benchmark between 28 to 30%, and yeah.
Okay. My next question was on the laminate segment. We've shown a remarkable improvement in the margins and the profitability of this segment. So if you can just highlight what led to such a stark improvement over here.
There are 2-3 main parts. One is export demand was really good, and I think we can feel it, number one. Realizations are better. Raw material price are more or less under control or reduced. Freight cost has been, it's down like anything. We can say it's pre-COVID level now. So
okay. Because if I look at our blended realizations on a quarter-on-quarter basis, our realization per sheet has come down from 725 to 720 rupees. And even in exports, our realizations are down. But despite of this lower...
Mr. Karan, there are a lot of other things. Like, when we talk about realization per sheet, we are selling 0.5 mm sheet, which may be around $7 to... We are selling 3 mm sheets, which may be $30-40. Okay, so we are now taking out this average. So when you have a low thickness volume, then possibly your realization is down. These are the reasons.
No, what I'm trying to say is that would freight cost be one of the major reasons for this sort of improvement in the profitability of this segment?
Freight is one of the reasons, I would say. Freight is one of the reasons.
Okay.
There are so many other factors like price and raw material costs are quite under the control. We have increased our export volume, if you see.
And also I would like to add here is the product mix. As Keyur mentioned earlier, the product mix plays a big role in calculation of our average price.
Right. My last question was on the MDF segment.
Mr. Manan, I would request you to kindly come back in the queue for follow-up questions.
Sure.
Sorry, Manan bhai. Yeah, I mistakenly taken Karan bhai's name.
No problem.
We have the next question on the line of Mr. Achal from JM Financial. Please go ahead.
Yeah, good morning, sir. Thank you for the opportunity. Sir, can you help us with the number with respect to price difference between us and some of the other brands and also unbranded MDF?
See, frankly, we don't come across any unbranded competitions in the market, but yeah, it could be around 10 to 12% because that segment is completely different, and I believe it could be around 10%, 8 to 10%.
So we are 10% premium to the unbranded MDF.
Yes, you can say. Even if we compare import, blended price in Hyderabad or Coimbatore or Bangalore, we are almost 10 to 12% higher. I know it's a bit technical, but let me explain you. Whatever the boards we are offering, it has some specifications, it has some parameters for performance. For instance, our density is ranging from 720 to 740 or maybe 750 kg per meter cube. When they are importing, in invoice itself, they are mentioning 670 to 690 kg per meter cube. So these are the things which, customer is also considering.
Right.
It's not the same product what import is coming, even in interior grade, even in plain grade.
Correct. Now, and compared to the other brands, let's say Green Panel, how different we would be compared to Green Panel, similar board?
Product-wise, yeah, we all guys are same more or less. The technology is more or less same, and we are working on our product mix. We have our own way of, marketing approach. They have their ways.
So you're saying we are similar priced compared to even the other
price
brands?
is always, some places is plus or minus. I would not agree on that part.
Okay.
Because it's something priceless is something printed.
Correct. Got it. And sir, when you say 13% of the volumes from Vizag plant is value added, how do you define the value add? Is it basis the margin, basis the category of the product? What is it?
Yeah, because if I say if we talk about our average realizations, then it is maybe around 23,724 rupees per CBM. I'm talking about AP's realizations. And when we talk about 13% value-added realization, it's almost like 35,000 per CBM.
Sorry, I'm not very clear. So you're saying anything above the blended realization is defined as value-added. Is that so?
We have a basic product that is the interior grade. Okay, that's just a plain MDF board. Its realization comes around 24,000 per CBM. But when you add some performance like, high density or water resistance capacity, or you put a paper and pre-lamination on it, there are so many other things.
Right.
So these are the category which is around 35,000, and that's what around 35,000 is our realization.
Got it. And just one clarification on the timber price. Can you help us with the timber price on a rupees per kg basis for our
I'm not sure, but I believe it is around 3,700 rupees per kg, per ton.
And this is for 3Q average or the current price?
I think current price, I believe. I'm not sure. I need to check.
And how about it was like in 2Q and 3Q average, sir? I'm just trying to understand because
Q2 around 3,500 rupees per ton.
Okay, got it. Thank you. I'll come back in the queue, sir. Thank you.
Thank you very much.
Thank you. We have the next question from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity, sir. One very simple question. How do we differentiate our products in the marketplace? That's the first question, sir.
Well, in terms of differentiation, number one, we have a three category. One category, we don't much focus, that is unorganized player and all these things. Second is import. Again, that quality and our quality is different. As I said, we focus on two basic para. One is quality, another one is services, number one. Number two, in terms of pre-laminated MDF board, today we have a two range. One range is pre-laminated plus catalog, which is a very different texture kind of a pre-laminated MDF, and then another segment is laminated MDF, where we have 100 plus new colors. Every 2 or 3 months, we keep adding 5-10 new decors according to the designs and fashion trend in the market. So we focus. Number three, we definitely demonstrate our products to all the end user, including carpenters, OEMs, and all these people. So our focus target is we straight away approach our end users and channel partners in terms of sales and marketing. And we demonstrate our product and we inform about our quality.
Sure. Sir, is there any way in which we actually compensate or encourage the carpenter to use more of our products? Do we have the technology in place wherein we are doing some bundling?
I think all the organized company, probably they have some kind of a loyalty programs.
Okay. Sir, what percentage of sales would that be? What goes to the carpenter?
Very tough to say, because it's just, not in a very large scale like laminates. But in MDF, it's now picking up.
Okay. Okay. Sir, any numbers over here?
No, I don't think I can give it right now. I don't have that figures with me.
Sure. Sir, my second question was, what is the difference between Veer MDF and Veer HDFWR? Basically, I understand the product proposition, but if one has to look at it from a pricing and a margin standpoint, how different would that be?
Okay. Veer MDF. It's a plain, basic MDF. Okay, I'm sorry. Veer MDF. Now, when we talk about HDFWR, it's a high density fiber board, water resistance board. The density of standard MDF board is around 720 to 740, and this board is almost 840 to 880. So we are talking about 20% more density, and its performance like other parameters are tremendously great. This product is used mainly in kitchen and wardrobes, and in terms of realization, it's almost 1.5 times more. And if we talk about margins, definitely it has much better margins.
Sir, possible to quantify something on the margin profile, please?
At this side, I would definitely say it will add another 15-20% minimum.
Okay. And sir, how do we see competition in the marketplace specific to this particular product? Is it unique to us, or are there other players also who have similar product?
Everyone, mainly we don't see much of imports in this category, and all organized players are working hard to promote this product, including us, and we are very confident about grabbing our market share in coming months.
Sure. This is very helpful. And sir, the last question was more on sourcing of wood. How do we ensure that the wood which is being sourced is ethical in nature? Any policies that we have in place at the company level? How should we understand this?
Yeah, so we have a general criteria of fixing up the wood, how the moisture level of the wood should be, and basically it's all agroforestry. So we have certain parameters which has to work. And this is the most ethical practice of purchasing the wood.
Basically, we are not sourcing product from forest. We are using agroforestry.
Also, I would like to add here that we are carrying out a program for developing more agroforestry. Like in last couple of years, we have already grown more than 12 crore trees, and we have taken a mission to grow 4.5 crore trees this year as well, and we'll be keep on doing this. So we make sure that we do a healthy agroforestry and which will give us the healthy raw material.
Right. Sir, is there some numbers over here which is quantifying or qualifying that whatever wood that the company produces, it is from agroforestry? Is this something which is audited? I'm not very sure. I'm still learning the sector. So how should one understand this particular aspect?
In India, the government is not allowing to cut any kind of a forest. So the material which has to be used are always from the agroforestry. So we educate the farmers on this for developing their farms and converting their farms into the agroforestry. Just for an example, we take a boundary wall of the farm where a farmer is growing some kind of a vegetable, which is ideally not used, where we teach them to make sure that you can grow agroforestry on your boundary, and that can be later our raw material, and which can also help him to protect his farm.
Sure. No, this is quite helpful. Thank you so much.
Yeah.
Thank you. We have the next question on the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good morning, sir. Most of my questions have been answered. Just on this forex loss, so can you quantify that what was the loan in, or what was the average loan outstanding in foreign currency during the 9 months, and what was the percentage? Because the percentage depreciation in rupee would be much larger, so the impact of 11-12 crores is something that I could not understand. Can you quantify and do the maths?
Okay. If you see our overall debt is in the range of 350 crore. I am not including the unsecured loan from the promoters. Right. Now, out of that, almost 200 plus crore, there are two loans. One is in USD and one is in Euro. The amount is around 200 crore. And I think the difference in terms of forex rate, I think you know. If you compare with March, and again there's a difference of 7-8 rupees. Again, if you compare dollar and euro, both way, I think there is a drastically change. But the overall exposure in terms of rupees around 200 plus crore so far as the foreign currency loan is concerned. And that is how this loan has come up.
No, so that 11-12 crore actually looks to be lesser than what it should have been if you're adjusting for it.
No, see, otherwise we already have natural hedge in terms of normal outstanding. Maybe it is a export, maybe I think import, but the net impact after adjusting the natural hedge benefit, so the net impact is this. So, and this is not I think one particular currency. It is both ways. One way it is euro and another way it is USD. So the combination of both of them will come to this particular figure. In the previous quarter and even last year also, we had a positive I think impact. But for the last one quarter specifically, we have this losses.
So when we had taken this loan, we had not hedged our exposure to this loan by buying forward contracts?
No, as I see, when we have got this loan, so far as the euro loan is concerned, it was like at the rate of 0.85 only. But because of the last, I think, 3-4 months RBI initiatives in terms of increase in rate, that has affected, and the our cost, which was 0.85, has reached to more than 3% now. And similarly, in terms of USD also was again linked with LIBOR, but then so far, I think for the last almost 1 year, we have not seen any major fluctuation, and that is how we had covered, but it was not covered fully because of this natural hedge factor. But recently, because of this, I think drastic change it has affected. But now internally, we have taken it very seriously. And we are just taking some action in such a way that at least we should not have such situation in future.
Okay, because otherwise every quarter, depending on how the exchange rate movement is, you will have a forex loss or income going forward?
Yes. It is like as per the India's guideline, and I think we are just following that guideline only. So as per the suggestion of auditor, and see, as a policy, if you compare with other company, each company has a different policy to disclose in financial differently. So as of now, we are just, so far as profit is concerned, we are showing in other income, and if it is a loss, then we are showing in other manufacturing expense. So unlike other companies, we are not showing it in finance cost. And secondly, as of now, we don't have any project which is running or in an implementation stage. So there is nothing to be capitalized so far today is concerned.
Understood. And sir, in terms of the, now that we are almost through with this financial year, so what will be the kind of revenue guidance and EBITDA margins for the coming year in laminate and MDF?
See, I think I just won't be able to give you the exact figures, but I can definitely tell you that current quarter has an impact of price and other things, and because of this forex loss. But I think so far as I understand, I think this current quarter, that is January to March, I think there won't be so much forex fluctuation. That is what I believe, but I may be wrong also. So far as the overall margin is concerned, I think as QB has said, we are already working on a couple of things where on one side, the value-added products we are just increasing. Secondly, we are putting our efforts in terms of increasing capacity. And third is like the overall optimization of cost. So we would definitely maintain our margins, which is there. If you can see our overall margin in the 9 months figures, I think we'll definitely maintain that margin.
I meant for the FY24, sir. Next year, what kind of growth and margins we are looking at?
See, growth-wise, I think 15-20% growth in terms of revenue is definitely there. And margin-wise, we will improve. That is for sure.
Understood. Sir, in the rights issue, what kind of...
Mr. Gupta, request you to kindly come back in the queue for follow-up questions. Thank you. Participants are requested to kindly restrict your questions to 2 per participant. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question on the line of Krishna S. from Vihas Advisors. Please go ahead.
Yeah, thank you very much for the opportunity. And I guess the management is really working hard, considering the external factor, because we are living in a world where we are very much codependent on the external factors, global factors and all. So having said that, and plus most of my questions have already been put up, but 1 or 2 questions remain. So one among that is that, like if we consider the current quarter gone by, which is the 3rd quarter of the current financial year, adding back the forex losses, so can that be considered as, a reasonable figure going forward for the next 2-3 quarters for profitability?
See, I think this quarter is an abnormal quarter so far as the forex loss is concerned. Not for me, for everybody, I think, across the industry. And I think you can also understand and appreciate that part. So far as our part is concerned, I think, as I said in the earlier question, we don't see much more fluctuation. Just like last quarter fluctuation may not be there in the current quarter, that is January to March. And I think way forward, I think I'm not able to give you any comment on that part so far as forex part is concerned. So far as the profitability concerned, I think we are looking forward in terms of very positive. So far as the improvement in terms of margins, it is definitely there in the next 1 year.
Yes. So we can see that so in short, to put it very simply, so once we add back the foreign, so like if you eliminate the impact of the forex loss, so whatever profit we are looking at in the current quarter, so more or less that could form a base for, from which we can try to grow through the, the cost cutting measures and cost optimization measures. So would that be a fair assumption?
You can take that base also, and we can tell you that in the future we'll definitely improve. That is for sure.
Understood. Thanks for that. And the second question is that with respect to the rights issue, so rights issue, finally we have come up with a figure of around 125 CR, roughly here and there, crore here and there. So now this 200 we have taken an approval. So any chance of going for a further further, or we'll restrict to that figure that we have filed the DRHP?
Okay. Now see, as of now, as per the filing which is done, and as per the first filing, the draft filing, we already put that figure. And as per the SEBI guideline and the LODR, we can increase this amount by 20%, or we can decrease this amount by 20%. So from 124 crore to, we can go up to 149 on the upper side, and we can restrict our right issue at around 99 crore also. So I think within next couple of days we will just decide internally, and we'll finalize the couple of things in terms of right issue. One is the pricing part, and second is the timing also. Because see, we are looking forward in terms of this right issue, and as we mentioned in the object, we would like to reduce this promoter's loan by adjusting into equity. That is first part, and that amount is around 57 crore. Remaining part is like working capital, where we are looking at a couple of opportunities related to operational level, not the expansion part. See, when we started this project in AP last year, we had exposure of working capital. It was around 84 crore in terms of CC, that is fund-based facilities. Now, even after this achieving capacity of 70+%, and still we have not increased this working capital facilities, and we are managing the same thing within this limit only. So, considering I think today's position, the way we are looking at way forward, I think export in terms of other penetration in terms of areas in India also. So I think we may need some working capital, and that is how we have planned in such a way that in case of such requirement, we can definitely get that working capital immediately. And that is how we have planned for this right issue. So if you see this, this happens as per our internal timeline, so it should complete. If there is no change in terms of management decision, then I think we will be able to complete this right issue in March. If that is the case, then I think in terms of debt, 57 crore will be reduced so far as promoter part is concerned. And secondly, as per the normal repayment schedule, we are already repaying, that would be around 45 crore. So practically in March balance sheet compared to March 22, March 23 will have at least 100 crore less in terms of debt. And secondly, if you compare with profitability in last March versus March 23, I think we'll be in a better position, and that is already evident in the last 2-3 quarters. So our debt equity ratio will decrease like anything. So that is what we are planning. And secondly, when right issue is already completed in March, I think we'll be sitting on cash comfortably, so far as 31 March is concerned.
Great. It seems to be a good, a good calculation. So I think great. So I think we should, the way that we are strategizing, we should look at it, and then I think it will be good. And now to the last question. So we have so the foreign currency loan. So though it looked in the initial stage, it looked a little cheap, but this is the experience of many companies at later stages because of the exchange rate fluctuation. That foreign currency loan starts to look a little bit, that benefit is diminished with respect to the rupee loan. So what has been the experience of the company? So in the future, because has the company come to the conclusion that forex loan vis-a-vis the rupee loan, the advantage is not much, and what would be our take for the future expansion?
Okay, see, so far today is concerned, just a minute. See, in terms of when we had planned for the loan, it was very, very, I think, lucrative. I just give you example of euro loan, that is 0.85%. And, considering the hedge, I think the natural hedge which we have so far, it was very, very competitive. And in terms of our finance cost, till last quarter, I think our finance cost in terms of overall, it was in the range of 5 to 6%. Now, last quarter, I think this has changed, and that has changed by at least 2 to 3%. Now, coming to your question, see, we are already looking at the option of converting this loan into rupee loan also. However, I think we will have to have a couple of options and then we will decide on this part. But so far, I think our experience is very good. So far, we have not find it is having any further cost. But then I think after having this quarter, we'll definitely internally look at it and we'll plan to either hedge at some extent or we can also plan for converting some part of the loan into rupee loan also. That is also, I think, possible.
Yeah. Understood, sir. Understood. Fair enough. So that's all from my side. Thank you very much, sir. And good luck for the days ahead.
Thank you.
Thank you. We have the next question on the line of Anand Soni from Prudent Equity. Please go ahead. We have the next question on the line of Hina from DAM Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just wanted some understanding on laminate. On the domestic side, we're hearing that organized competition is coming back. So one, has that been happening? And the second would be on raw materials, with prices cooling off, are we passing that on to the channels or are we retaining some part of it?
I think domestic side you are talking about demand. Am I right?
Yeah. Demand, basically unorganized players are coming back in a big way into the market. Would that be true? Is that impacting demand?
No, it's since long. I mean, they are not the first one coming now. It has been years. So it's something not there. Second thing, we are almost, if we talk about our exports mix, 9 months is almost 65% is our exports and 35% is domestic market.
Okay.
And we are focusing our product in a different segment where, interior and specifiers are working.
Sure. Okay.
That's one of the reasons. As long as raw material price is concerned, I think it's quite stable.
Yeah.
It may go down. It may not increase further.
Yeah. So I think chemical prices have already gone down, right?
Sorry?
So, chemical prices
are stable. It's not.
Okay. And if they further go down, will we be passing that on to the channel or would we be retaining some of it?
See, it's case to case. I mean, not necessary. Company like us, we are working more on specifier and all these places. So we have more of a promotions and sales promotion scheme and all. So that's the only reason. Otherwise, we don't see any pass on.
Okay. And on the export side, we hear that Europe is slowing down when it comes to demand. So would that be impacting us in the, say, near to medium term?
No, we don't export a lot in America and Europe. We more or less exports in Asia, Southeast Asia and Gulf countries.
Okay, so there we don't see any problem.
No, we see in fact very good demand.
Okay. Thank you so much. Thank you.
Thank you very much.
Thank you. We have the next question on the line of Arun Baid from ICICI Securities. Please go ahead.
Hi, sir. Can you help us? Is when you mentioned that the margins the MDF will be maintained, was that with the context of Q3 margins or 9 month margins?
Okay. I think I had already mentioned very categorically when we are talking about future, I'm just talking about the 9 month margin.
So which was about ballpark 26%.
Yes, exactly.
Yeah. And so on the export realization, have they come down further from the reported numbers of roughly 19,000 in Q3?
Yeah, I think it's more or less stable now.
At 18.5, the same number as Q3?
Yeah, because now, we don't see much of a change in freight also and selling price are more or less same.
Okay. And so just one more data point is how the margins different as compared to exports and domestic?
See, there are costing is different, definitely. But I just can't comment exactly in terms of percentage or value. But if you compare last couple of quarters, I think we have improved in terms of volume so far as the export is concerned, and we are just trying to maintain the margin as of now. Way forward, compared to last, financial year and COVID impact, yes, there was an impact, but then now it has been stabilized. So this margin will continue. That is what I can tell you.
So I appreciate your point. Just a ballpark, like if theoretically, let's assume that, domestic is X, then export would be what? 0.7X, 1.3X? How should you look at it?
See, if you just see our realization, in terms of domestic realization is around in the range of 24,000, right? Now coming to export, it is in the range of 18,000. So I think it is very evident in terms of realization part. So far as the costing part is concerned, there may be a difference in terms of cost component, considering the specific cost which is attached to this export. But realization wise, it is 24,000 overall versus 18,000 odd. But
I would like to add there are some hidden benefits too. Number one, in exports, normally we have only 1 or 2 or 3 thickness, and we run this production for a day or 2 or something like that. So we save a lot on this part. Second thing, applications of marginal cost. Third thing, utilizations of capacity. Fourth thing, maintaining our market share in export, because we have decided that we will definitely promote 3,000 to 4,000 CBM per month in region where MDF is we can export. And because we are talking about natural hedge also, these are the some of the benefits. And last thing which we don't forget is we have obligations also, so we have to export certain quantity.
And the last question, sir, we are more or less utilizing our capacity by 50%, on a full capacity. This number next year, for the full year, we should look at what percentage as capacity utilization?
I think what we are talking about is 80 to 85%. That's our target minimum. So we are working hard on this part. Not only 85%, but we are also trying to go more if we get an opportunity in export market or anywhere. So we are ready for 90, 100, whatever. But that's our goal. And as long as our value addition is concerned, I think in my previous call also I have mentioned that we want to reach to 40 to 50%. Though we are doing almost 62 to 65% from Chikmagalur plant.
And sir, assuming we can do 80-85%, which is your target, the mix would be similar between domestic and exports, or would it be much different?
No, I believe we have a target of 4,000 CBM per year. That's what our target is. So we want to go around 48 to 50,000 CBM per year.
Okay. Great, sir. Thank you very much for this.
Thank you very much.
Thank you. We have the next question from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good afternoon. Sorry I joined in late, so I may have missed some of your remarks. First is on the MDF. If I look at export versus domestics, why is there such a sharp difference? For the imports landing in India, and even export margins that we Indian companies make compared to domestic margins, we understand that there is a sharp difference. Export margins are very low. So where do we, is it that the cost of Indian manufacturers, production cost for Indian manufacturers are much higher compared to those coming from Southeast Asia?
I think, if I'm not mistaken, there are, players like from Thailand and Vietnam. They are exporting in Gulf region, and more or less our price and their price are same. And second part, there is a change in realization, could be FOB and CIF part also. Otherwise, whatever the rate difference Thailand or Vietnam is getting, that's their benefit or loss, and whatever the freight benefits we are getting, that's our loss or profit. Otherwise, market is there, and I think it's almost like, for example, $200. So probably it's more or less same for Indian players or Thai player or Vietnam player. It's always on a seat basis or maybe half every basis they add the freight. So this could be the reason.
So what I'm trying to understand, the southern ports, the imports which are coming in, they are at 10 to 20, almost 20% cheaper compared to the cost of Indian producers, selling price of Indian producers. Why should there be such a large difference? I'm assuming the exporters to India would not be selling at very thin margin or a loss. Is that understanding correct?
If we talk about, their realizations, it's more or less same. If we consider whatever the price they get for Dubai, for instance, or Jebel Ali port, or for Chennai port, more or less their realization is only $4 or $5 plus or minus. That's all. Now another thing is very important is they do not have demand for Europe market or American market. So for them, selling this capacity is very important. They cannot sell some quantity or 100% quantity to one country. Otherwise, their price will fall. So they always balance. Some part they sell it to Gulf, some part they sell it to India.
So is it akin to what the situation we would be looking at for at least next 1-2 years when India is adding a good chunk of new capacities?
I really doubt 1-2 years is pretty long time.
No. What I am looking at for next 1 year and 2 years India, the capacity which are coming up, because we would also be looking at domestic. Obviously, there is no contesting that India is looking at strong growth opportunities, and hence all these capacities eventually will get absorbed and more would be required.
But in the interim, which is adding up is not going to be at 100% from day one.
Correct. No. Where I am coming in from, like India is also exporting at low margins as an opportunistic sale. Is it the similar situation that the imports landing in India at low cost is more of an opportunistic sale and not the recurring sale which is meant for Europe and all? So once demand improves in Europe, US market, the supply pressure from exports landing in India, that may reduce?
Definitely, there will be increase in the price. So definitely, and that will also help us Indian player, because indirectly, even in other market, country like Gulf and all these places, there will be price increase. So, indirectly it will be benefit for us also when it comes to exports, not only competition. And second part is maintaining volume is very important for every company in Indian market. And at present, if you see from Q2, despite import, if we talk about our sales volume, in Q2 it was, I would say, we did it around 54,000 CBM. Now in Q3, we did it around 57,000 CBM.
And how did export number, how much of this is exported? Sorry if I have missed that.
Total export, plain and prelim comes around 13,000 something, and last quarter it was around 10,000.
Okay, so you have seen good jump in your export volumes.
As I say, our target is to maintain 4,000 CBM per month.
Per month. Okay, so you are close to your run rate now. You are already achieved that run rate, and this will be maintained.
We have incremental export obligations too.
Correct. So incrementally, your growth will be driven from domestic market penetration only.
Yes, domestic market was good too for us.
Okay.
If we talk about last quarter, it was, I would say, around 34,000 CBM. Sorry, 45,000 CBM. Now this time it is 45. So we can see around 2-3% growth in domestic market too. And importantly, from value addition point of view, from our AP plant, we have grown from 9% to 13%. That's very important.
Okay. And you said that around 26% margin could be sustainable numbers here on. 25-26% range. You don't see any major risk to that margin numbers for you?
No.
Okay, and laminates this quarter margins 10% seems to be better off compared to the preceding many quarters. So do you see this as now a structural improvement?
Yeah, we believe it will have a good improvement in coming days.
Is it because more value-added product for you got you were able to sell higher in exports market where the value addition requirement is more?
Yeah, you are right. It's all about product mix. Number one, it's all about price decrease in freight also. Number three, we have a quite stable raw material pricing. Even some places it's going down too. And demand is really good. So I think that there are so many factors.
Okay. Last question on the, can you give the PVC EBITDA number?
See, at PVC, if you consider the overall volume in terms of value and volume, it is hardly 1% of total, I think, sales. So it is very, my number say it is immaterial so far as the figures are concerned.
Okay. No, why I'm asking this because the MDF.
I would answer this question. If we talk about 9 months, from -13 to -6%. So we have a substantial improvement in 7 to 8%. And if we compare from our last quarter, from -16% to -6%. So we have improved almost 10% in terms of EBITDA margin.
Okay. Okay. And MDF, how much is the forex loss?
My mistake. Last quarter it was 7%. Now we have reached to -2%. So we are very close to the target. And last financial year, it's I'm sure -13 to -2. So we are doing quite good. If we
right. At least containing the losses.
If we talk about 9 months comparison, from -16% EBITDA, we have reached to 1% EBITDA. So we are in now positive part.
Positive at least. And sir, forex loss, how much is there in the MDF and all? Because what you have reported is net of X of forex loss.
As I mentioned in the earlier question also, the total loss is around 11.62 crore.
Okay.
It is substantial portion is from MDF only, and that too basically the outstanding term loan which is there in terms of Euro and USD.
But that have to be booked through EBITDA only. That should go through into the interest part, right? Not in the EBITDA portion.
No, it is not that way. See, there are a couple of ways to manage this thing. We have followed the accounting policy where if there is a profit, we are just showing it in the other income, and so far as if it is a loss, then we are showing it to other manufacturing cost. Now, coming to your question, see, when it comes to finance cost, generally it is like whenever there is a accounting policy which is decided that any differential part in terms of foreign currency loan versus same loan, if it is taken in domestic currency, then the differential part we can park in the finance cost. But it is again for accounting policy which each company has to follow, and this has to be I think consistently followed. So we are following, as I said, profit in other income, loss in other manufacturing cost.
Okay. For 9 months, how much is
the part of the cost which is before starting the actual production of any expansion or a capex? Then definitely we can capitalize that part.
Capitalize that, right.
So far as we are concerned, we don't have anything which is being capitalized.
Yes. And so for 9 months, the forex loss would be how much, which is gone in other expenses?
It is 11.62 crore.
Oh, only everything is in this quarter when
Yes, it is 12 crore. So far as 9 months is concerned. For quarter, it is 11.62.
Right. So most of the losses is incurred in this quarter, which has dented the reported EBITDA margin significantly.
Yes, exactly.
Okay. I think that's all from my end, sir. Thank you. All the best.
Okay.
Thank you.
Thank you. That was the last question. We would now like to hand it over to the management for closing comments.
Thank you once again for your interest and support. We'll continue to stay engaged. Please be in touch with our PR agency Ad Factors, our investor relation team for any other further details or discussion. Look forward to interacting with you next quarter. Thank you.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.